Warren Buffett and Berkshire Hathaway just sold a bunch of the S&P 500. They keep hoarding cash, so this is looking bad. What should we as investors be doing now? Looking here at this post by Warren Buffett's stock tracker, I noticed that Berkshire Hathaway fully exited the SPY and VOO holdings, which means they fully sold out of the S&P 500, which is definitely concerning.
Whoa. Not just reduce, but fully sell out 100%. Okay, all right.
It's also concerning that Berkshire added a bunch of Domino's pizza because Papa John's tastes way better and it's not even close. Come on, Warren.
I disagree. We had Domino's on Thursday and on Friday.
Warren, seriously, let me dive deeper with you so that you can understand, and I'll also explain a bunch of his other moves because it looks like he's trimming a bunch of the financial sector and getting out of financial stocks, which does not look good for the financial sector in general, or at least what he thinks. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. So after doing a bunch...
All right, I'm excited. I think this channel is going to be a good one. We need to keep in the rotation. Okay, so let's jump into what I want to do is a couple things. I want to first take a look at the S&P 500 inside of OVTLYR. I want to also look at the financials since you mentioned that too. So first, let's jump over into OVTLYR. And as you can see, we did get a sell signal just on February 13th. So today's the 18th. So seems like Uncle Warren was following our signal that came out last Thursday. So let's look at it, right? So I'm looking at the S&P. I changed the view to 6 months here, and I noticed something right off the bat that I thought was really interesting. Was the buy signal and sell signal came roughly around the same point here. Maybe lost $1, maybe gained $1, but the S&P itself is getting more and more greedy. But everybody inside the S&P, right, the 500 stocks that make up the S&P 500, they are getting less and less greedy. I thought that was super interesting right there. Right, we've got a divergence here where the market itself is getting more and more greedy, yet the constituents within the market are getting less and less greedy. It's like we have the people who are buying just the market saying buy, 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 and everybody who's buying all the stocks in the market, they're starting to turn. They're starting to be like, wait a minute, I'm not so sure this is a great idea, and they're starting to sell a little bit. This is what I'm reading that as, and that I found incredibly interesting. But also market breadth. We've been covering this for a while, right? Market breadth has been tanking. We're down to only 49.73% of stocks showing a buy signal, right? They either have a buy or a sell. There's no in-between point. So 49% have a buy signal here. And you can even see it right here. We've got 54 new sell signals today, 1,215 in total, 40 new buy signals today with 1,201 in total. So now the sell signals outnumber the buy signals here. And I also think that's super interesting. Let's jump into the financials. We'll probably see the same thing. You can see market breadth peaked up here. In fact, I traded HSBC, made a little bit of money in January, and that was the only, I had 2 trades in January. HSBC was my winner. I forget what the loser was, but the winner was bigger than the loser, which is how the game is played. And so I have a little bit more in my account than I did at the beginning of the year. But I traded on this uptrend right here. And then if you want to go back, you could probably even find the videos where I was trading it. It peaked up here, and I said, I will not be making any more trades because it has peaked and is starting to come back in. And that's exactly what happened here. It peaked, right? I can't see the future. I can't see off to the far right of the chart, or yeah, far right of the chart here. But I said, watch it come back in, which is exactly what happened. Came down, crushing on the financial sector here. So let's continue on to see what he has to say. But I do want to say hi to everybody else. Let's see. Rick, I prefer Papa John's, but Domino stock did jump recently. Maybe on the back of Uncle Warren. Probably so. Mari, good morning. There's a girl in the chat. Y'all be cool, okay? Jay, good morning. Ryan, first live stream. First and best now that you're here, my friend. Manny, good morning. Buenos dias. HSBC is still trending up. Still trending up. Okay, so let's continue on with this video here.
Bunch of research. This is the thing that's interesting to me. Warren Buffett held a bunch of money back during the early 2000s dot-com bubble and the 2008 financial crisis. He saw some of the writing on the wall and didn't FOMO in when everybody else was trying to get that easy money. He was buying up solid, sustainable business that produced a solid cash flow and relatively fair valuations, while everyone else was jumping in on the things that were super high valued or overvalued just because they were all the hype at the time. Then,
man, that sounds really familiar, doesn't it? I'm sure that's where he's going with this, but that sounds really familiar to today.
When everything came crashing down, not only did his portfolio not drop as substantially as his peers, he also had a crazy amount of cash sitting off to the sidelines ready to pounce. The Globe and Mail said it best here. Historically, Buffett has argued for keeping large capital on hand to guarantee Berkshire Hathaway's capacity for quick and forceful response when prospects present themselves. From this vantage point, cash is a tool in the investment playbook for both defense and attack. From a defense standpoint, it provides a barrier against financial uncertainty, enabling the business to withstand economic downturns free from the agony of selling other assets at bad times.
Is this not exactly what you see me do constantly? Like I say, I've put on 2 trades this year, and I've been in cash from November 22nd to mid-January, and then only for a couple days. And then from that point to now, I've been in cash again, right? Cash is the trade. Stop thinking that you need to be jumping into every trade, like every new social media stock that's popping off, right? Stop thinking you need to be in trades that are like AMD. You need to be in stocks like AMD because some YouTube idiot is telling you this is a generational low. It has to go up from here, right? Of course, it is going up from here, but that doesn't mean you need to be in it, right? It's still got a long way to go before it's in a bullish trend right now, okay? A long way to go. Not only that, right? There's so much to be said about sitting in cash during uncertainty, right? For example, the market drifting sideways for 2 months. We're about to hit a new all-time high today, which is great. But the market drifting sideways for 2 months, that chops people up, right? That takes out accounts, right? An easy market is one like this, where it's the trend and breadth are moving together and you can make money. But a choppy market like this, where the breadth is going one way while the trend is going another, makes it extremely difficult, right? And you don't have to be trading, right? One of my mentors, Mark Minervini. In fact, I did make a change on the YouTube channel this morning. I put in all my Market Wizard interviews that I have already. I probably will have more at some point in a Market Wizard playlist. So go for it, right? When you evolve to the point of always being patient and only taking quality trades, that means you've decided that you're in it not for the action, but to make money. You have sit out power. You never force trades. You're a pro. You need to start realizing you can get to this point. You don't have to put on trades. And if Warren Buffett just cleared his portfolio, I mean, dude has like $1 bajillion under management. And if he just cleared his portfolio of these, you might want to be doing the same too. And not feeling FOMO.
Enabling the business to withstand economic downturns free from the agony of selling other assets at bad times. Cash gives unmatched flexibility on demand. It helps Buffett to seize unanticipated.
And this is cool. This is really cool to see somebody specifically going into how important cash is, right? We never ever hear that. But let me introduce myself real quick. I'm just some random guy on the internet. My name is Christopher VOO. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. So let's get back to the video here.
Prospects requiring swift response, often during market crashes or when unusual assets lose value. Buffett's ability to buy significant interest or entire business at reasonable prices free from outside financing depends on this flexibility. Buffett makes sure Berkshire Hathaway can always make decisions others, who might be over-leveraged or cash-strapped, cannot, by keeping liquidity. This strategy emphasizes a basic aspect of his philosophy. Cash is a tool to take advantage of the inefficiencies in the market, not as a static part of his portfolio. With that much cash sitting off to the side and ready, one can make very fast and strategic purchases when other companies are going to have to figure it out and may need time to free up liquidity in order to make that same decision. Warren Buffett has been the pinnacle of patience, which is just so hard to do. Now, you may be looking at this and saying, well, why does Professor G say not to time the market when Warren Buffett definitely has way more money than Professor G and is definitely a better investor than Professor G, and he's definitely timing the market? Well, it's not just Professor G saying that. Warren Buffett says,
what qualifies as timing the market? Getting in and getting out? I don't know. I've always hated that adage of time in the market beats timing the market, right? So basically, buy the market, never sell. Is that what you mean, right? If that's what you mean, like what do you do in the time from January of 2022 to January of 2024, right? Do you just sit on it, right? There's no guarantee that it ever comes back. Just want to point that out. What do you do during September of 2000 up to September of 2007? And then right after that, from September 2007 again until June of 2013. So you're telling me it basically took 13 years to post new highs. So you just buy? Like, I've never understood that. That doesn't make sense to me. It's buy when the market's working for you, sit in cash when it's not. That's how the game is played.
Says the same exact thing for you as an investor.
I'd like to ask both of you, if you were 30 years old again and had your first...
Oh, by the way, he's about to I have seen this clip before. If this is the clip I'm thinking of, he's about to say traders are completely stupid or something like that. So just get ready for it.
First $1 million in the bank, how would you invest it, assuming you're not a full-time investor, you have another full-time job, you can cover your expenses with other savings for about 18 months, no dependents?
Well, I'll be very simple. Under the conditions you name, I'd probably have it all in a very low-cost index fund, and it'd probably be, might be Vanguard. Somebody I knew was reliable, somebody where the cost was low, and because you postulated it, you're not going to become a professional investor. I would recognize the fact that I'm an amateur investor, and I would feel that unless bought during a strong bull market, which this hasn't been, I would feel that was going to outperform to a degree bonds under current conditions over a long period of time. And then I'd forget
something he said right there, right? A little nuance here, right? Unless you bought during a strong bull market, Warren Buffett just basically said only price pays, right? The only time you're getting paid is during a strong bull market. The only time you're getting paid is, he literally said it. You have to understand the nuances of what he's saying here. He literally just said, you want to be buying on these stage 2 uptrends. That's your strong bull market, right? If you buy at any other time, do you make money? You might make $1 or $2 here or there, but overall, the market is not conducive for you, right? And if he just sold out of S&P, he might be saying that with his money, right? Money talks, bullshit walks. That's what my mom always told me.
unless bought during a strong bull market, which this hasn't been, I would feel that was going to outperform to a degree bonds under current conditions over a long period of time, and then I'd forget it and go back to work.
It's in the nature of things that you aren't going to have a whole lot of screamingly successful professional investors. You've got a great horde of professionals taking croupiers' profits out of the system, most of them by pretending to be professional investors. And that is in the nature of things too. But if you don't have any rational prospects of being a very skilled professional investor, of course you should compromise on some simple thing like an index fund.
So right there, he's telling you, stick to an ETF or index fund with low fees, and that tracks a broad market index, something like the S&P 500 or the total US stock market. Plain and simple.
And he's not wrong. He's not wrong at all. If you can't devote an hour a day, 30 minutes a day to looking at the market, if you don't want to take on that responsibility, if you want to do the ostrich effect, which is I'm just going to throw money on it and bury my head in the sand, right? If that's what you want to do, I'm telling you right now, Google up the year you plan to retire. Let's say you want to retire in 2055, type target date retirement fund 2055, and just throw money at that, right? Just throw money at that, because they're going to have fund managers who are going to do all the work for you. But if you want to have outsized returns, if you want to be a market participant, right, you need to understand how the market is played, and that only price pays. Only price pays. That's right. George said it right there, right? OPP. Good morning, Christian.
Simple. The reason why you're not going to do well with Warren Buffett's approach of timing the market is because you're not Warren Buffett. You're likely not a professional trader, and even if you are, you're probably not consistently beating the S&P 500 like he says right there.
But if you don't have any rational prospects of being a very skilled professional investor, of course you should compromise on some simple thing like an index fund.
And that you will not get that advice from anybody, because nobody gets paid to give you that advice. And so you
Well, I mean, I gave you that advice. You can pay me by hitting the like button.
will have all kinds of people telling you how much better they can do for you than that, and how if you just give them a wrap fee or give them commissions or whatever it may be, that they will do better, but they won't do better. On average, 1,000 other people like you do the same thing. That group of 1,000 will do worse if they listen to the people that make pitches at them. And in the end, why should you expect? I mean, you'll get a very perfectly decent return over a 30 or 40 year period by doing what I suggest. And why should you expect more than that when you don't bring anything to the party? The salesman will tell you that you'll get it, but you won't.
Now that's just a straight mic drop. Be careful with financial advisors. I sometimes get heat down in the comment section saying that I'm not a financial advisor. Well, I'm very proud that I'm not a financial advisor. I obviously can go and take the test and pass it and call myself a CFA or a CFP, but I'd rather give you the real information for free here on YouTube, because my goal is to help people. not add to the problem and keep scamming people out of money. Also, most of the people that give me that heat down in the comments section, I later on find out that they're a financial advisor and they're definitely just mad because I'm giving you the information free and they would rather charge you for this. You definitely don't need them. You can absolutely do this on your own and get that financial freedom. So like I was saying earlier, Warren Buffett made some other pretty big changes within the portfolio in the last quarter. The company trimmed its stakes in Bank of America to 680.2 million shares with a value of 29.9 billion from 797.7 million. NU Holdings to 40.2 million from 56.4 million. Citigroup to 14.6 million shares from 55.2 million. And
That's a big cut. 55.2 million to 14. That's a huge cut.
Capital One Financial to 7.45 million shares from 9.10 million shares. It increased holdings in SiriusXM to 116.1 million shares from 100.
Okay, that surprises me because who uses SiriusXM? Like legit, who uses this? I just want to see SiriusXM. I remember like a million years ago, that was one of those penny stock plays that everybody would play all the time, right? When it, yeah, down here when it was at the $3 range, but I mean, it's changed a lot, hasn't it? Where to hit like literally under $1, hit as high as $70-ish. Now it's on its way down, and he added more to that. Okay. Well, it is in an uptrend right now. It does have some overhead resistance, Uncle Warren. I just want you to know. It has some overhead resistance, Uncle Warren.
105.2 million, OXY to 264.2 million shares, and Domino's Pizza to 2.38 million.
Let's go to DPC. I know that one has been killer lately. Yeah, Warren Buffett knows. He knows. He knows how the game is played.
Shares from about 1.28 million. It maintained its largest holding, Apple, shares at 300 million shares, which were valued at $75.1 billion at the end of the quarter. A stake in another of its largest holdings, American Express, also remained unchanged at 151.6 million shares, valued at about $45 billion. Now, as far as the S&P 500 exit that Berkshire Hathaway went through, it's kind of interesting to me that they even held any S&P 500 at all, because they like to find value and pick individual companies, especially at distressed value, and let them grow. But the total amount he had in that portfolio of SPY and VOO put together was $48 million worth. The entire Berkshire portfolio is worth around 200.
Yeah, that's nothing. That's chump change.
$70 billion. This would mean that the S&P 500 percentage was somewhere around 0.01%.
So 1 basis point.
That would be like saying that if you had a $100,000 portfolio and you sold a stock worth $10, that would really not affect you or change your investing portfolio in very significant of a way. So the S&P 500 portion,
Well, geez, like sucker me in thinking that something's going on and tell me that, like it's 1 basis point of his portfolio. I didn't realize that.
Was never a meaningful part of that portfolio. So this selling out of the S&P 500 shouldn't be taken too seriously or telling us that maybe it's time for us to exit the S&P 500. If you look back at any time Warren Buffett's ever talked about the S&P 500 or about the average American investor, definitely says that you should stick with it and stick with it long term, and that most people should just have about 90% of their portfolio in something like that. It is definitely concerning that he's not buying too much extra within the portfolio. He does have a lot of cash off to the side, meaning that he does think a lot of things are overvalued, and he's just waiting to buy something new. But I'm going to continue to heed his advice and just invest in a low-cost index fund that has a broad market index like the S&P 500 or the total US stock market. To see my favorite 3-fund portfolio, check out this video.
So many things popping up. You know what? I didn't mind that. I didn't mind that at all. I didn't realize how little of a position he had in the market. I really thought it was going to be a big thing based on what the title was. But there's a lot of good in that video. There is quite a lot of good in that video, right? Let's see. Sage, good morning. After 2 years of being 90+% invested, I've gone back to almost 50% cash over the last 2 months, taking very nice profits. And now we wait. Christian hit done for on that like button. Thank you, my friend. Isn't the stick your head in the sand effect what most people do? Oh yeah, legit. That is like, I don't know what the percent is, but I would imagine 80% of people in the market do exactly that, right? Bravo Fit knows, he or she knows that Minervini has a VCP squat T1, T2, T3 line of least resistance, only price pays. Jay nailed it. This is my own catchphrase. I came up with this, right? Sit in cash and don't F up. Sit in cash and don't F up. Let's take a look at a few of these stocks that y'all put in the chat before we bounce out of here. Rick says, that's how I have my pension set up. Every month it's just buying 2 ETFs. Yeah, I mean, if that's what you want to do, I mean, honestly, like over time, it's proven to work really well. Would you pull up Oxy? Let's pull up Oxy. OXY. All right, Oxy's not looking too hot. right? You've got 10, you've got the, let's look at the trend template. You know the deal, right? You've got the 10 under the 20, price under the 50. Let's look in outlier on Oxy. Let's do a couple things. OXY. Then while that loads, let's go over to energy sector and let's look at the energy market breadth here, sector breadth. Oh, you know what? It actually, that sector's breadth has bottomed and is now moving back up. Now I put the 10 EMA. This is the moving average of the market breadth. And actually I developed this indicator. I'm pretty proud of this. I did the math and came up with all of how it works. But you can see right here, this crossover point's happening. It might be today, it might be tomorrow. So market breadth for that sector is actually coming up. Let's look at the Oxy inside of outlier here real quick. Let's go to the 6-month view. All right, so we did get that sell signal back on January 22nd. Let's mark January 22nd on here. Go over one more candle. There you go. You had your 10, not quite under the 50, 20. Price was under the 50. Your crossover point on the trend template actually came a couple days later. But let's just say if you were to have shorted it. Oh, I changed my arrow size. That looks funny, doesn't it? Be down about 4% from that point right there, right? And you can see, right, the greed, even at that sell point, was just like evaporating, and more fear has come into it. But it looks like the fear may have bottomed. Right here. And then for everything inside the energy sector, it looks like it's tracked pretty similar, but not as fearful as Occidental Petroleum has itself. So that was a good one there. George says, Warren knows about SiriusXM and has a hidden agenda. They do have that digital radio wavelength monopoly. I was probably going to get Parlay. Oh, okay. I didn't know that. Bob, good morning. I think he's planning to integrate Oxy Siri and into his Flying J business. Okay, let's do this. Let's rank the video for me real quick. Now we're ranking Professor G's video here, and let's see. How would you rank this? For me, I would rank it decently high, honestly. I didn't feel like he was saying buy AMD or anything dumb like that. And he came with lots of receipts. I love receipts. How are you going to rank it here? I see Manny throws a 6, George throws a 5.1. So it's mostly meh with a side of decent. Courtney, good morning. She threw it a 6. Christian throws a 6. Bert throws an 8. Sage a 6. Ryan 8. He seems honest. Rick 6. Joe Love says 4. I'm actually going to give it. I'm going to give it an 8. I'm gonna rank it decently high, and I'm gonna rank it decently high because I didn't feel like he was coming across like, oh, you need to buy this stock. Oh, this is going up. Blah blah blah. Right? He just came to the table with lots of good information. Jay says he gets a 6 because nobody can get a 7. Yeah, true. I might have ranked it a 7. Right? But real quick, you can still save 61%. Now, you no longer can save 64%, but you can still save 61% on an annual plan, which is only 87 cents a day. And if you're already on a monthly trial, you can shoot us an email and we'll take care of the rest. But I want to take a look at some trending stocks. I hope you don't mind. Let me pull up my tab for that real quick. I want to look at some trending stocks and then we'll get out of here for the day. If I can find where that stinking trending stocks is. There we go. All right. So first trending stock of the day. Now, these are stocks that are ranked in order of like who's talking about what over on Stock Twits. Let's look at Mullen, MULN. Oh my gosh, give me it's a 20-cent stock. If you are buying a 20-cent stock, we can't be friends. I'll just put it that way. Wait, that can't be right. MULN. It says it's 1182. Why does TrendSpider show at? Was there like a reverse split or something? Must have been. I don't know. Either way, I would never trust. I wouldn't buy that with your money. Let's look at GRRR. We talked about that one last week. GRRR. Grr. Oh, yeah, that's a trend. That's what you want to see right there, right? 10, 20, 50. The gorilla technology is getting the opposite of a monkey hammer. It's getting a gorilla bounce right there. That looks sharp. I like that. But if you are trading this, it looks like it's up 10% pre-market right now. I don't know what's going on over here. Let's see what's going on with gorilla technology. An expanded partnership with British Telecom to broaden AI video analytics deployment across the port. Sure. All right. You just throw AI in a press announcement. It's going to be good to go, right? Let's look at one more real quick. SLDB, Solid Biosciences. All right. SLBD. And did I type that wrong? SLDB. My bad. SLEB. While that loads in, let me say hey to Nathan. Good morning. And hey, Susmit. I'm new here. Can I use the platform can I use that platform you use only if I take the annual? Oh, no. We have a monthly membership. You can get in on a monthly, no problem. Just saves you a ton of money if you get the annual plan. All right, so we do have the 10, 20, 50 cross today, which is a good thing for me, right? Now, keep in mind, this is in a really long downtrend, right? This looks like an ugly stage 4 downtrend right there. So if you are getting in, you're doing so at quite a lot of risk. And you've got an order block overhead, but it's about $1 above that. So 23%. You do have earnings coming out in a few days. How many days is that for earnings? You've got about 17 days of earnings right there, which I love to trade up into earnings. This could be a fantastic play right here. So if you are going to take a look at that, just be really, really careful. So that's going to wrap it for me today, right? That was the wrong button. That's going to wrap it for me today. Of course, tell me what you're trading in the chat, and remember that only price pays. Be sure to come back tomorrow. We'll help you save time, make money, and start winning with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you click one of them, and I also recommend you have a fantastic day. We'll talk soon.